Hello and welcome back to another episode of the For the Property Investor podcast, and we're here with the weekly news. And the only man that brings us the news is, of course, Nick Bendel, and he's here as well.
I got the
Welcome, Nick.
memo and I am here. Thank you for having me, Owen.
My pleasure. And it's everyone else's pleasure that you're here. So, because without you, it would just be me rambling on. So I'm glad you actually bring us something to talk about. So, but before we get into the news, how's your week been? Anything interesting?
My week has been wonderful. It's just one of those wonderful weeks that's full of enjoyment and productivity. I had a very nice week. My business, Hunter and Scribe, we're a copywriting agency that writes content for finance and property professionals. And we happened to get a very nice 5-star Google review from one of our buyers agents clients. Hunter and Scribe are great to work with, professional, efficient, and always produce quality results. That was very, very nice of that client to leave that very nice review.
Very good. It's I'm going to match you with a 5-star review that we've got in the last week as well. It's from a client, a new client, and they gave us a 5-star Google review, and they said, "I'm only new to Leafield and have only recently purchased an investment property. I've been dealing with Owen Davis and Annie McKay Hines and getting ready to lease out my property and getting the details sorted. Annie and Owen have been excellent, great communication and very organised. I feel that I've made the right choice in property management." So thank you very much to Mark, who that was. So thank you, Mark. But now that's enough talking about ourselves. Maybe we should get on to the weekly news. What's in the news this week, Nick?
We've got 3 interesting stories. The first one is rental momentum comes to an end. Domain rental data for the September quarter shows rents are generally at record levels, but have stopped rising. House rents are at record levels in all 8 capital cities, although house rents in the combined capitals have remained unchanged for 5 consecutive quarters, the longest period of stability since 2014 to 2016. Meanwhile, unit rents are at record levels in 6 capital cities, although unit rents in the combined capitals have remained unchanged for 2 consecutive quarters. Domain said that rental momentum had come to an end throughout the country. After 3 years of relentless increases, growth has stalled. Houses stopped first, now units have followed. Demand remains strong and vacancy is still tight. However, tenants have reached affordability limits, population growth has eased, and a rise in investor activity is slowly adding to the stock, Domain said. Policy shifts, particularly the expanded first home guarantee, which allows more buyers to enter with 5% deposits and no mortgage insurance, may gradually absorb some longer-term renters into ownership, easing demand on the rental market over time. Owen, your property management business, Leafield, operates in 5 states. Does Domain's data correlate with what you're seeing on the ground?
Yeah, absolutely. We've noticed that rents aren't skyrocketing and increasing, week after week, month after the month, as we were seeing there for a little while. But still, as I said, strong demand and low vacancy rates. But what I think people have started to realise is that if they have an affordability limit, then they need to look elsewhere to find value. And that's where we're seeing a lot more people moving to different areas to be able to get that place that they can afford. So there's, which I've always said to people, if you can't afford where you want to live, then you need to look further afield. There are choices. Then there's lots of choices. So yes, we've definitely seen that happen, and seeing that rents are starting to cap out. But in some places, we're still seeing growth.
Okay, well, vacancy rates are still extremely low. They've been that way for a few years. And that suggests property investors are still finding it relatively easy to attract tenants, but the domain data shows they're now struggling to secure rental increases. So, what can investors do to make their properties more valuable in the eyes of budget conscious tenants?
Ooh, good question. The biggest cost to a investment property owner is always vacancy.
Mm,
So if they're competing for tenants out there, then they want to get the property rented as quickly as possible. So doing things like having air conditioning, having a dishwasher, having a fresh coat of paint
mm,
are all things that will get the property leased quicker. So so all of those basic things is what's going to make it easier to get it rented. And at the um, end of the day, though, tenants are always going to want to save money. So if you've got a bit of a competition there, then be the cheapest property in the market. And I've got an example of this actually. We've had a property on the market for a number of weeks, and it's in an area that's fairly competitive. There was a little bit on the market that was comparable, and we were well priced, and we were getting applications, we were getting inquiry, but for some reason, um, people were choosing other properties over this one when it came down to the wire. So we had to make a decision with the owner to make an adjustment because we'd been vacant for about 3 weeks now. And we were all scratching our heads going, why isn't this property getting leased? So we made that decision to drop the price by $30 a week. It was a 5% decrease. And all of a sudden, we were the cheapest property in the
mm.
market. And we got at least with multiple applications and within a few days. So sometimes when you need to get at least, you need to make that call and be the one leading the pack.
It's interesting. So, when rents were rising rapidly for the past few years, I guess tenants were meeting meeting kind of property investors, but now property investors need to maybe meet tenants' expectations instead.
Yes, and because sometimes tenants can be picky when they have a few to choose from, they can keep on choosing other properties over one particular property. Not that there's necessarily anything wrong with it, but at the end of the day, if they can save 20 or $30 a week, and and if you want to have choice as a property owner of the type of tenant you want to have in there, then yes, be the cheapest one, and you'll get leased very quickly.
Okay, if rental growth has stopped, even though vacancy rates are still really low, does that mean rents are likely to fall if and when vacancy rates start rising?
Again, we always talk about supply and demand, Nick. It's if there's more supply in the market and not as much demand, then yes, rents will start to fall.
Hmm.
So it's quite possible. But rents at different times, just like the example I used, where we might have to drop rents. That that in different markets, when supply does outstrip demand at certain times, then rents will fall. Um, but it could be only a month or two later, once that supply dries up, if there's still the same amount of demand, then rents will start to increase again. So it's a bit like the stock market. If we did track it with a bit of a line graph, we would see that rents over weeks and months, they do tend to flow up and down, just like the stock market does. And so it's not something that is where it has stagnant pricing.
Well, let's move on to our next story. Households are still feeling the pinch, but pressure is easing. The average person's real disposable income fell steadily between 2021 and 2024, but has increased this year to be slightly above pre-pandemic levels, according to the RBA. Real disposable income, by the way, is the income we earn after tax and interest payments and adjusted for inflation. The RBA said there were three main reasons for the recent rise in real disposable income. First, inflation has fallen. Second, interest rates have fallen, although mortgage repayments remain higher as a share of household disposable income than before the pandemic. And third, the average borrower has continued to make extra repayments into offset and redraw accounts, adding to their savings buffers. The RBA said fewer people are now using community services organisations, and inquiries to the National Debt Helpline appear to have stabilised. So this is an interesting story, Owen. The real disposable income of the average Australian today is roughly the same as at the end of 2019, a little bit higher, but roughly the same. So does that mean we've wasted the past 6 years?
Oh, well, it depends what you mean by wasted. It's when we talk about the last 6 years, though, it is heavily dominated by that by the big C word, COVID. Just to clarify, and it's and yes, we tend to talk about pre-COVID and post-COVID worlds. And we all think about 2019 feeling like yesterday. And it's like, where did the last 6 years go? So if you ask a lot of people, you might feel like, yes, where did the last 5 or 6 years go? And yeah, it feels like it's been wasted. But from a real disposable income point of view, it's yes, we've had a rough time, and some people have done well out of the last 6 years, and some people haven't. So I wouldn't say it's wasted, but it's certainly been a bit of a roller coaster.
Okay, so if you could go back in time, what would you tell 2019 Australia to do differently?
Ooh, save your money, and maybe have some more self-awareness, and make decisions on your own, but get personal advice, and don't take advice from politicians about your own personal health.
Very interesting. I won't touch that one.
Yes.
Do you expect the average person's real disposable income to increase or decrease over the next year? The reason I ask that is, on the one hand, interest rates might fall further, which would support an increase in real disposable income. On the other hand, the economy might worsen and unemployment might rise, which would support a decrease in real disposable income. What are your thoughts?
Well, the economy seems to be traveling fairly well, but we are seeing changes in employment and different industries. I think the effects of AI technologies are starting to take effect in some industries, but also we're seeing wages increase in some industries and wages decrease in others. So whether that's related to AI effects, it's don't know, but it's there's lots changing. So the world is changing; it's forever changing. So make sure you're ready to take advantage of any opportunities that you can see.
Well, speaking of change, let's move on to our final story. Block sizes shrink as land becomes harder to secure. New research from PropTrack shows the median block size of houses sold nationwide fell from 670 square metres in 2015 to 645 square metres in the past year, a reduction of 4%. That decline has been driven by strong population growth and constrained land supply. Since 2015, Australia's population has increased by 15% and is forecast to rise another 16% over the next decade. With demand rising and land becoming more expensive, new homes are increasingly being built on smaller lots to remain price competitive. Interestingly, though, while land size is trending down, the average new house remains at about 241 square metres, meaning buyers are opting for relatively bigger homes on smaller blocks. Owen, the traditional quarter-acre block is 1,012 square metres compared to today's average of 645 square metres. Can we say that the quarter-acre block is dead for people who live in capital cities?
Well, I wasn't even aware the quarter-acre block was still a thing. It's and you're talking about these averages of 645 square meters. I didn't know that was still a thing. It's just like in most capital cities, when you get a new block of land, it's usually got a 2 or a 3 in front of it. Yeah, if you've got a 4 in front of it, then you're cheering. So, yes, I mean, obviously this takes into account probably acreage blocks as well. So might skew the average up a bit quite dramatically. But yes, most of the blocks that I see for new builds, have a 2, 3, or 4 in front of it. It's so to get back to a quarter-acre block, well, yeah, you'd be in regional areas for that.
Well, if they've got a 2 or 3 in front of it, that's not a quarter-acre block, that's a quarter-acre block.
Yes, very much so.
Do you expect block sizes to keep trending down?
Yeah, absolutely. It's they're trying to squeeze people into smaller houses onto smaller blocks to be able to get people as close together as possible. With if people still want a house, so that they're not in a strated property, then yeah, and you want something new, you're going to have to be on a smaller block.
Do you reckon the day will come when our major capital cities are like Singapore and Hong Kong? In other words, lots of apartment blocks, but few standalone houses?
Well, yeah, look at parts of Sydney and Melbourne especially. You can already see that. And it's so yeah, it's already happening, and a lot more apartment blocks. Especially Melbourne CBD, it's full of high-rise apartment blocks. Sydney has got a lot of sub-cities all around Sydney Metro, where you've got lots of medium-sized high-rise apartment living. And yeah, it's definitely the way of the future. If you want to be able to get less cars on the road and have people using public transport, then those transport hubs are very, very popular.
Well, it sounds like the quarter-acre block is dead, although apparently it was dead a long time ago, and long live the apartment tower.
Yes, that's definitely the trend in the way things are going. So yes, units, and more units.
I'm wondering, are we going to see the day when Parliament House just, becomes an apartment block? Are they going to add maybe 50 stories to that?
Well, it's there's probably some kind of heritage order on that building, so the facade will certainly stay, and yes, there'll be a big tower over it, but somehow I don't think that will end up happening, Nick.
Funnily enough, last night I was actually exchanging emails with a federal assistant minister. I won't reveal the details here. Let's discuss that privately. So I'll have to ask him whether he's planning, whether the government's planning to add a few stories to Parliament House.
Okay. Well, it sounds like we better wrap this up so we can get off the air, so I can find out what the tea is from you.
Well, thank you as always, Owen, for the great chat.
No problem, and we'll hear from you next week with the news. Thanks, Nick.